Let's get across the market open now. Mark Gardner joining us from MPC Markets. Mark, happy Monday to you. Let's look ahead to today locally. I was expecting a fairly sharp fall at the open.
Yeah, I think a bit of a sharp fall at the open, but I think we'll probably see a bit of outperformance from our index overall. We've had some pretty positive moves in the likes of copper and iron ore, which will help that mining sector, the materials sector. The banking sector, particularly in the US, with earnings has been quite positive. So I think we'll probably see, the banks fairly well supported. So for our index, I don't see too much downside. We did have a very positive day on Friday, though, obviously being up nearly 1.5%. So, but overall, yeah, I think on the open, a little bit of weakness. The US was up basically mid-session until there was more jawboning from Trump about EU tariffs. So they've largely finished unchanged overall. I think the Nasdaq may have squeezed out a new record high, but it'll be all about quarterly updates here in Australia, which AMP this morning has had some inflows for the first time since 2017, I believe, and then Woodside Fortescue. Some notable names as well, and obviously we've got some US earnings.
What's your view on AMP at the moment?
Actually fairly positive. I think there's been a bit of a turnaround there. We don't own it necessarily, but certainly not as negative on AMP as what we've been in the past. And I think they have shown some positive change, and I'm not surprised that there's actually some inflows now overall. So we probably should see a little bit of positivity around that today.
More broadly, I mean, given those gains we saw last week, how are you looking at the market at the moment, and just in terms of your overall positioning?
At the moment, we're just sort of waiting through US earnings season as it stands. We've got some pretty decent names this week. Obviously in Google and Tesla. Netflix last week had a bit of a poor Friday, but mainly because it had gone so high. But as you can see there's some fairly big names. Coca-Cola might be quite positive this week. Pepsi was up 8% on its earnings. But earnings have generally been, not only have they beaten, which they generally tend to do in the US, they've beaten by some fairly significant margins overall. So, and look, Tesla could be a bit of a Elon's back show. That's a fairly risky trade, but I think it's probably not a bad one to be buying leading into sort of Thursday morning. Very light on in terms of calendar for economic data. We've got minutes here, RBA minutes here on Tuesday, Michelle Bullock speaking Thursday, and there's some manufacturing data through the week. So as far as how we're positioned, we're looking for, the US part of the market really does offer some really nice quick turnarounds, particularly on earnings. So we'll be fairly US focused this week, but overall as well, the likes of BHP through $40 for the first time in a long while on Friday. Iron ore is drifting higher, despite for whatever reason, there's this continual negative press about the commodity sector in Australia, particularly from the AFR. But we've seen iron ore jump around about 14%. So BHP's main commodities they're selling, I mean, copper's at record highs, and iron ore's making a decent recovery. Coal's been making a decent recovery. There's still BHP, even with that 3% gain on Friday, is still lagging the underlying commodities it sells by a good 5 or 6%, to be honest, and record production. So, we'll see. I think we'll start to see some improvement from the likes of the big miners, and that's going to be really positive for our index overall.
Interesting to see how, particularly the bigger miners, BHP, Rio, are positioning, because they're certainly upping their exposure to copper, aren't they?
Absolutely, yeah. So the rapid expansion of the AI data centres really is going to need power and wiring. Obviously, the top three resources you're going to need are aluminium, copper, and power. But also, I think there's been at least 8 deals done in the nuclear space for AI data centres moving forward. And you're talking about companies with budgets bigger than most countries. And I wrote an article last week around that, and I expect to see that go higher. But interestingly, water is another massive resource that AI data centres in general really need. There's a company reporting earnings tonight in the US called Roper Technologies, which is involved in water technologies, filtration, water transport, etc. Because those data centres tend to be placed near, in fairly isolated places, and they do need water. So otherwise they can't cool them down. So I think that demand as well, if the Chinese economy were to recover, I think people will be scrambling for copper, and there's potential decent upside in that part of the market for sure.
So is that how you're playing the data centres, or are you still looking perhaps for direct investment there, the likes of NextDC and Goodman?
We have Goodman, and we'll continue to hold that. That's our general data centre play. I think there's a bit too much debt for us in NextDC. And the couple of the uranium players here in Australia, which are significantly underpriced compared to global peers. You've got the likes of Kazatomprom and the Kazakhstani sort of government, semi-private, hit record highs on Friday. Cameco's at record highs. We're 40% from record highs in Boss and Paladin. And BHP as well, they don't really give any clear numbers on it because it's actually just a byproduct of their copper production. But they are still the biggest uranium producer in Australia by a fair way as well. And Olympic Dam is still the largest deposit discovered globally. So if they wanted to go into production in that as well, that'd be a huge boon for BHP. So I think the bricks and mortar part, definitely, in terms of copper and uranium, but Goodman would be our favoured rate.